Just one person from CDTFA and Mr. Brunette, appellant's rep. Are there additional people who should be joining us?
Can you see me?
Oh, no, I
Can you
can.
see me? Okay.
I think it might be an issue with my view at this point, so let me just go ahead and get started if everybody's here. Oh, yeah, okay, it's just my view, I'll fix it later. Good afternoon, welcome to the Office of Tax Appeals. My name is Judge Teresa Stanley, and this hearing is for the appeal of Franco. The hearing is being live streamed and will be posted on the Office of Tax Appeals YouTube channel. We do have a stenographer with us today. Ms. Alonso is present and reporting the hearing. Is reporting the hearing word for word. So we ask that every person speaks one at a time and avoids speaking over one another. Also speak clearly and loudly, and when needed, Ms. Alonso or any panel member may stop you to slow you down or to make sure that we have a proper transcription and hear every word that the parties would like to say. After the hearing, Ms. Alonso will produce the official hearing transcript, which will be available on the Office of Tax Appeals website. I'm going to also ask that people mute their microphones when they're not speaking to avoid feedback and additional outside noise. Okay, as a reminder, the Office of Tax Appeals is not a court, but it is an independent appeals body, which is staffed by subject matter experts and is independent of any tax agency. Are there any questions before we go on the record today? Okay, seeing none.
Sorry, I do. I just have to go pick up my kids in like 10 minutes. Is it okay if I'm on the phone while I drive?
Yeah, as long as you've got yourself muted. And I don't see on the screen, you're Mr. Beltran?
Yes.
Okay. Yeah, mute, as long as you're muted so that we don't
Okay.
have to listen to the kids. We can always hold off on your testimony for a little bit if it's a quick run to get the kids and come back.
Yeah, it's like not even 5 minutes away from my house, so.
Okay, so maybe, yeah, you can listen in, but maybe we can also hold your testimony to the end of appellant's presentation, and that way you won't have to be in the car while you testify. Okay. All right, we're going on the record in the appeal of Franco. It's Office of Tax Appeals case number 2304-13039. The date is January 15th, 2025, and the time is 1:07 p.m. This hearing is being held electronically with the agreement of the parties. Okay, and I've just received some advice, Mr. Beltran, that you can go ahead and log off while you're going and picking up the kids. You don't have to listen in, and we'll just make sure that you get reconnected when you come back. Okay. I am Judge Teresa Stanley. I'm going to be the lead for purposes of this hearing. My co-panelists, Judge Suzanne Brown and Judge Josh Lambert, are with us today too. We are all equal participants in deliberating and determining the outcome of this appeal. I'm going to ask the parties to identify themselves and who they represent, starting with appellant.
Hi, my name is Sammy Franco. I'm representing, I'm here for myself.
Good afternoon. My name is James Brunette. I'm representing Mr. Franco.
Thank you. And for the Department of Tax and Fee Administration?
Hi, my name is Courtney Daniels. I'm representing the California Department of Tax and Fee.
Chad Backus, attorney with the department.
And Jason Parker, Chief of Headquarters Operations Bureau with the department.
Okay, thank you. At the pre-hearing conference, we discussed the issue in this case. As stated in the minutes and orders, the issue to be decided in this appeal is whether appellant Mr. Franco is personally responsible for the unpaid sales tax liabilities of Slamwich Company LLC doing business as Beach Hut Deli for the period April 1, 2016 through November 25th, 2017. Mr. Burnett, do you still agree that that's the issue?
Yes, Your Honor, that's correct.
And Ms. Daniels, do you agree as well?
Yes, thank you.
All right, just briefly with exhibits, appellant has not submitted any exhibits, and I believe they intend to rely on the exhibits submitted by CDTFA, which were exhibits A through D. Appellant didn't object to the admissibility of those exhibits, and therefore exhibits A through D are admitted into evidence. Are there any issues that the parties have with relation to the exhibits? Okay, seeing none, I will move on. Mr. Brunette, you requested 45 minutes for the appellant's presentation as well as witness testimony. Did we lose Mr. Brunette yet?
No, I'm here.
Okay, so as long as you're still here, can I ask, since there will be 3 witnesses, that Mr. Franco, Mr. Coronado, and Mr. Beltran, please raise your right hand. Do you swear or affirm that you will tell the truth, the whole truth, and nothing but the truth? You have to answer
Yes.
out loud.
Yes.
Yes, I swear.
Okay, thank you. And just to point out for the parties and the public who might watch this, that we swear in only witnesses who are testifying as to actual facts. We do not swear in representatives, and all the participants for the CDTFA are just arguing and not testifying, so they will not be sworn in. Mr. Brunette, you may have your witnesses testify in the narrative or ask specific questions. You can give a narrative presentation first, or whatever order you feel comfortable in making your presentation, and you can proceed when you're ready.
Okay. And just to clarify with your guidance, so I'll be making a brief statement, and then I will hand this over to Mr. Franco, who will discuss some timeline of events, and then we'll have the witnesses speak as well. So it'll be, just if it's okay with you, somewhat of a joint effort between both myself and Mr. Franco.
That sounds perfect. Thank you.
Okay. Well, I'll start off with a brief statement, and thank you for the opportunity here. So I'm here to represent Mr. Franco, and it's our intention to show that the willfulness provision under the Revenue and Taxation Code was not met on behalf of Mr. Franco to meet the requirements of the Notice of Dual Determination. It's our understanding that if any of the provisions are not established by CDTFA during the investigation process, the Notice of Determination cannot be issued. Based on our review under statutory provision 764.080, personal liability can be imposed on a responsible party only if the person willfully failed to pay or to cause to be paid taxes due from the entity. Quote, willfully fails to pay or cause to be paid, unquote, means that failure was the result of an intentional, conscious, and voluntary course of action. And the failure may be willful even though such failure was not done with a bad purpose or evil motive. To reiterate, in order to establish willfulness, CDTFA must prove that the failure to remit taxes was the result of the intentional, conscious, or voluntary course of action. All three of the actions must be proven, or the willfulness test cannot be met. In the case of Mr. Franco, failure to remit taxes was not intentional, as Mr. Franco was operating without a choice under a breach of the business's original operating agreement at the time the taxes became due. In addition, the action of non-payment should not be considered voluntary, as the taxpayer was not the individual who broke the operating agreement. The taxpayer here, Mr. Franco, could not choose to voluntarily, but rather the choice was made for him by another officer of the business. So it's our contention that the willfulness test was not met, and the notice of determination against Mr. Franco should be rescinded. Based on the original petition for redetermination submitted by the taxpayer on November 30th, 2020, it's contended that a breach of the operating agreement occurred through conduct by Mr. Terrence Frazier, who held a 51% ownership stake in the company. In the operating agreement, it provides that members shall not be entitled to withdraw part of any of members' capital contributions or to receive any distributions, whether of money or property, from the company, except as provided in the agreement. And furthermore, all funds of the company shall be deposited into one or more recognized financial institutions. Lastly, the agreement requires that a complete book of accounting of the company's business in which each company transaction is to be fully and accurately entered. So on to Mr. Franco. Mr. Franco is a hardworking member of the Fresno community, and he's worked his way up from the bottom in the restaurant industry. Mr. Franco has perfected his craft through trial and error and gained experience as an employee running front of the house management at large scale restaurants. Since 2000, he's worked for well-known restaurant groups at physical locations, including Red Lobster, Red Robin, Jamba Juice, and Buffalo Wild Wings. After years of experience, in 2015, Mr. Franco and his wife were approached by Terrence Frazier, who pitched them on helping open and operate a new sandwich concept, Beach Hut Deli. Mr. Frazier was a family friend of the Francos and was a well-known business person in the Fresno community. After discussions were held, it was decided that Terrence wanted Sammy and his wife to operate the front end of the business, and Terrence would handle the finances and show him the ropes of handling a business. Unbeknownst to Mr. Franco, his lack of business experience was exploited by Terrence Frazier, who intentionally operated the business in which he manipulated the Francos to make it appear as if they had full control, but removed that control when it was convenient for him and his investors. This left the Francos high and dry when it came time to managing the finances of the business. Although Mr. Frazier was 51% owner, he ensured that the Francos signed all documentation, including bank signature cards, tax returns, lease agreements, etc., in order to limit his personal exposure. As noted in Exhibit C, it's exhibit number, so let's see, C number 9, titled 1508 Terrence Frazier. Mr. Frazier signed a CDTFA business operations questionnaire from the CDTFA, in which he stated that his responsibility at the business was, quote, "I loaned Sammy and Rachel money," end quote. This statement is a misrepresentation of his true duties and hands-on approach at the business location, in which the CDTFA auditors took him for his word. Furthermore, in Exhibit C, number 7, titled, quote, emails, an email chain shows that Mr. Frazier was actively engaged in the business operation, including hiring of bartenders, weekly sales meetings, daily camera recordings, and review of the store, and expected 51% of all profits. But as an experienced business person, he intentionally removed his name from documentation with his attorney's help when it was convenient. He wanted profit without the risk. Mr. Terrence Frazier has denied having any operational control, or had denied operational control of the restaurant, but the email chains in Exhibit C show otherwise. The email chain between Mr. Franco, Mr. Frazier, and the attorney, Mr. Emerizian, demonstrate that Mr. Frazier's belief is that he had majority of control and was able to remove the Francos from operation of the business. This would be inconsistent with CDTFA's definition of a responsible person for determining his personal responsibility. Furthermore, a point of contention occurred with the disappearance of operating capital raised by Mr. Terrence Frazier of $100,000. In the email chain, it's known as the Aaron Haynes loan. These funds were never deposited into the Slamwich bank account, and they were necessary for operating capital. It's believed that Mr. Frazier used these funds to repay other investors for separate investment projects, a telltale sign that he did not have the funds as promised in the original investment. As noted in the email chain from August 21st, 2016, Mr. Franco was in such a dire position that he, quote, could qualify for food stamps right now, end quote, signaling that he was not profiting at the time and struggling to make the business work. During the dual determination investigation, the CDTFA assigned Mr. Lee to conduct the analysis of the responsible parties. Mr. Lee had advised Mr. Franco that if he could show where the funds of the $100,000 were deposited, he would be able to determine if Mr. Frazier was violating the operating agreement and had committed fraud. Neither Mr. Franco nor the business ever received the funds in the business bank account, and they were unable to prove where they were deposited. The CDTFA was asked to subpoena the information in an email exchange between Mr. Lee and Mr. Franco, but no subpoena ever occurred. In conclusion, to prove willfulness, CDTFA must show that failure to remit taxes was intentional, conscious, and a voluntary course of action. All three of the actions must be proven, or the willfulness test cannot be met. Excuse me. Mr. Franco was operating without a choice under the breach of the business operating agreement at the time. And in addition, the action of non-payment of the taxes should not be considered voluntary, as the taxpayer was not the individual who had broken the operating agreement. The taxpayer could not choose voluntarily, but rather the choice was made for him by another officer. Mr. Frazier was actively engaged in the business operation, expected a 51% of the operating profits, but as an experienced business person, intentionally removed his name from documentation when it was convenient. That is the end of my statement. I'm going to, if it's okay with you, I'll pass it back to Mr. Franco.
Hello, thank you for the opportunity to present. The timeline that Mr. Brunette has given is very accurate. I wanted to provide a little bit more context to some of the information about the loan and the capital that was removed. In the beginning, Mr. Frazier had mentioned to me that he would put up all the money, take care of the finances, and we would be the sweat equity. About halfway through the build out, he told me that I was going to have to get a loan. By that point, we were neck deep in franchise agreements that we couldn't break, or we could have ended up, in suit for that. So we went ahead and started pursuing the loan. To my surprise, I thought the loan was going to be the LLC was going to get the loan, but he told me no, it had to be me. Because he had all the money and he didn't want to be left on the hook if the business didn't perform. So we discussed that over a couple of weeks and finally came to terms with I was going to have to collateralize my home We did that, and the loan broker who worked on the loan for us, along with Suncrest Bank, they had a tough time getting this, and there was the loan was under collateralized, and that was expressed to Mr. Frazier in an email. I mean, they did everything they could to have me as the only operating manager. They changed the operating agreement. And Terrence's answer in an email when I asked him if we should do it this way was, yes, we'll just change it back when we get the loan. So we get to opening, and we have finishing invoices that are needed to be paid, approximately $40,000, $45,000. And I went to Terrence because we had to, according to the franchisor, we had to hold a certain amount of money in the bank for the franchise agreement for working capital. If we would have paid that invoice from the bank account, then we would have been in breach of that agreement with the franchisor. At that point in time, Terrence told me he was broke and didn't have the money. So I had to pay that out of the company's bank account. And it took us down to, at opening, we had about $12,000 in the bank. And so that is like nowhere close to what we needed to operate at the beginning, because there were marketing requirements. So Terrence said that he was going to get a loan from a friend of his, and that would be enough for us to have the operating money that we needed and a little bit of cushion so we could be okay. He came to me at the restaurant with an agreement that was already prepared. We spoke about it over the phone. And it was from a gentleman named Aaron Haynes, who was a friend of Terrence's. The agreement was between Slamwich Company and Aaron Haynes. I signed the agreement expecting that we would get a check. And about a week and a half later, when I asked for the check, Terrence told me that he had used that money to pay off his original investors, and that the money, was not coming to the restaurant. So we were undercapitalized in the business. At the most important part is during the opening, when we had the requirements from the franchisor to give away so many sandwiches, to give away product at a loss to us just for marketing, and the large amount of payroll that comes at the beginning of an opening, because we have to train a staff and pay for trainers from the franchisor. Leading into that fall of that opening year, we had already started to fall behind with CDTFA, and I was working with a gentleman named Jesse, and I can't remember his last name. And I had to, we were so behind and couldn't pay the quarterly that we had to, I took a merchant processor loan, which is a horrible loan, super high interest, but I had to do that so we could, we could continue to operate. So we took a loan from a company called Knight Capital, and that loan could have been paid off in January with tenant improvement money. But Mr. Frazier also took the tenant improvement money of about $64,000. And so I was forced to take the remainder of that loan because it came in two sections. And they were taking money directly from our bank account every Wednesday based off of our credit card sales. So at that point in time, we were playing catch up. And my experience in restaurants has been running restaurants and training managers. And I traveled across the United States and trained managers for different companies. But I had never been a part of something like this. And that's where his mentorship was supposed to kick in. And, it seemed like once things got a little rough is when he tried to distance himself and claim that he was not an owner, just a lender, even though there's zero loan agreements between myself and him. And he is on the liquor license as an owner. He was on the bank account as an owner. His K1 tax showed that he claimed the loss as an owner, as 51% owner. And although he separated himself, Terrence managed through the cameras. We had weekly meetings. He would come in and give me directions. He was like my district manager. And so when he kind of disappeared at the end when I needed his guidance, and he just claimed that this wasn't his business, his inaction hurt, because I had no idea. I didn't have the resources that he does. So I had no idea how we were going to, fix the situation. I was told by him, keep the doors open at all costs. So that's what I did. And so through his direction, we kind of winded down the way we did. I had no resources to take care of vendors. We started having to to instead of using approved vendors, we were having to go to the store the night before to buy food to open the next day, so we weren't in breach with the landlord. That initial start off put us in a pinch financially. As far as him not being an owner, that was the appearance on paper, and it spelled out in the emails, was just so he didn't have to have a personal guarantee on the loan. As soon as Suncrest Bank became aware of that, they wanted to call the loan because I filed the taxes as I was supposed to through Terrence's accountant, who was everyone we used for financials was Terrence's accountant. We used Terrence's attorney. We used Terrence's loan broker. So he had an in and an understanding of everything that was going on. We had conference calls to go over P&L performance, and so he knew exactly where we stood with sales and use taxes due, and he sent me to several of his friends to try to get loans to cover it. But he didn't want to guarantee the loans, and they wouldn't do it because he was 51% owner. They would not allow him. They would not allow me to have the loan without Terrence giving a personal guarantee because of his ownership. So once Suncrest Bank demanded that he change his ownership, or they would pull the loan, Terrence had his Mr. David Immersion draft up a side note, saying that we would remove Terrence from all liability, all of the accounts, remove his name from all of the debt, but he still wanted to have his 51% ownership accounted for on the side. We didn't agree to that, and that's kind of where everything just went south, and he abandoned us. Right now I am a director of operations in the Fresno airport, and I handle multiple cost centers and am in charge of multiple departments there. And if I was to just abandon my job and walk away, I'm the one that would be held responsible, not my managers. So I feel that Terrence was the one guiding me. He was the majority owner. He was the one experienced decades of business experience compared to me, who was supposed to be mentoring me. And he walked away from me and left me out there to drown. And so I didn't have the resources to continue to stay open. So I hope that adds a little bit of context to the timeline that Mr. Burnett gave.
Thank you. Mr. Burnett, would you like to move to your witnesses at this point?
Yes, Your Honor, and I'm going to have Mr. Franco introduce them as well, so that they can make a statement.
Okay, I'm not sure if Rafael made it back on, but I know Gonzalo is on. So Gonzalo Coronado was one of our shift supervisors at the Beach Hut Deli, who was with us from the beginning all the way till the end. And he was a key part of the business, so always there, and had direct contact with Mr. Frazier, and that's what he's here to testify to today. So Gonzalo Coronado would be the first witness.
Can you see me, Sammy? Okay.
So at this point in time, Your Honor, would Mr. Coronado just make his statement, or I'm not sure how this part is supposed to proceed?
This is Judge Stanley speaking. It would be however you all are most comfortable with presenting the case. Mr. Gonzalo, if you would like to just make your statement and say what you have to say, we can always follow up after appellant's full presentation and see if the other party or if any of the judges have questions for any of the witnesses.
Okay, well, my name is Gonzalo Coronado. I was one of the key supervisors there at Beach Hut Deli. I know that I took a lot of direction from Terrence Frazier. He would go in there and acted as a ownership, as much as I would listen to Sammy, I would listen to Terrence. He played a big part in Beach Hut Deli. He would run to the bank. He would go pick stuff up for us. He would clean tables. He would jump in the bar, help out the bar, wipe tables down and stuff. He did play a big part in Beach Hut Deli. Is there anything else?
I mean, if Mr. James, Mr. Burnett, if you wanted to kind of, I don't want to, I'm unsure how this should go, but I guess if I'm allowed to ask, oh, go ahead, Mr. Burnett.
No, I was gonna say, Sammy, absolutely. I think that goes to show the hands-on approach that Mr. Frazier had at the business as a 51% owner, and I'll let Sammy now take a few moments to clarify some of those duties as well.
Yes, he would stop in. He was very much like a district manager would be as far as what with the staff towards the end. We were very open, and we let the staff know everything that was going on between ourselves and Mr. Frazier, because they were wondering where he was. They were wondering why things were going the way they were. And there was one specific email that we did share with the team. And that showed that up until the end, and I believe this was in October of the year that we closed, Mr. Frazier's exact words were, "I am 51% owner. I will be taking over the restaurant and replacing the team." We shared that with the team because we wanted them to know exactly what they were facing if they wanted to go find new jobs. Most of them stayed with us till the end, until we closed. They were very loyal to us because we were fair to work with. So I don't know if Mr. Coronado would speak to that, but that's something that I know that the team members all did see when we had a group meeting like towards the end.
Yes, I did see that email. He did time to time would tell us we knew he was part owner, but he would always assure us that he was part owner, 51%. And, he would send people in to pick up food, and would just pretty much mention his name. So us following him as a owner, we would do what they would say. He would say, they would say, "We're here to pick up food for Terrence, for baseball camps and stuff for kids." I personally would go drop off sandwiches for him. Yeah, he was there all the time up until the end, until, like Sammy said, we would wonder, like, well, you're here every day, you're here all the time, all of a sudden you're not here anymore. So, it kind of drew a red flag on what had happened with him. Like, where was he at? Yeah, that's pretty much it.
All right. Thank you, Gonzalo. I don't know if Rafael Beltran has made it on yet.
Yeah, I'm here.
Okay. So Rafael was also a key person with our sandwich shop. He also helped manage in the bar along with others, and I'm going to let him speak to his experience.
Sorry. Yeah, just like Sammy said, I was there from the beginning. He would come in from time to time, have weekly meetings with Sammy and Rachel. Excuse me. He would constantly call the restaurant, saying so and so is doing this, or this and this is happening, checking on the cameras, when that needs to get fixed, or just that needs to get attended to. And just like Sammy said, towards the end, he just stopped showing up, and we all wondered. And he did mention, Sammy is right when he said that he showed us the email about that him saying he was 51% owner and that he was going to hire clean staff and just hire a whole new staff. Yeah, that's about it.
Thank you for that. And just to conclude, I'd like to state that with this testimony, it's clear, and we understand that the purpose of this hearing is not to, or the end goal of this hearing will not have Mr. Frazier become a responsible party. we understand that's not the purpose of this hearing. We understand that this hearing is about Mr. Franco. But what, this time frame, the timeline, and the context goes to show is that, it's clear that Mr. Frazier created a situation in which he put the Francos in a position where they were deemed to be responsible for everything related to the non-payment of taxes, whether that's signing tax returns, signing the checks. And it's understood, and the evidence will show that yes, Mr. Franco signed tax returns, um, and had signature authority, but this was done at the direction of Mr. Frazier, and Mr. Frazier set up a situation in which it's clear that intentionally he put his name on the business for purposes of profit, maintained consistency that he was going to be receiving 51% profit. He was managing the business, yet for liability purposes, he limited his exposure when it came time to knowing those types of things. And unfortunately, with Mr. Franco's lack of an experience with operating the finances of the business, he was put in that position, and really without knowledge when Mr. Frazier was clearly running the operations of the business. So that concludes my statement here.
This is Judge Stanley speaking. Thank you all for testifying, and thank you, Mr. Brunette. I'm going to ask Ms. Daniels if she has any questions for any witness.
I do not have any questions at this time. Thank you.
Okay, and Judge Brown, do you have any questions for any witness?
I believe I will have questions for Mr. Franco that I'll start with asking now. I may have additional follow-up questions later. I wanted to ask Mr. Franco or Mr. Brunette, whoever wants to respond, but I'll start with Mr. Franco, about what efforts Mr. Frazier may have, whether Mr. Frazier did any actions to interfere with payment of taxes.
I would say, oh, I'm sorry.
No,
Sorry.
go ahead. I didn't mean, go ahead and you can respond and I'll follow up.
I've said this from the first time that I've met with
Mhm.
anybody, that I feel like his inactions were as powerful as any actions could have been. He deserted us when I had questions that I needed to have answered. He was supposed to be the capital in the equation, and we ended up losing our home, and the loan that we had costed us more than what he had actually contributed for his part of the business, which gave him majority ownership. And so I don't, I mean, his directions to me were keep the doors open at all costs, which to me meant make sure the rent gets paid and make sure we can serve people. And so that was his. Now, once we got to a point where he found out that the bank was going to call the loan, he just wanted his name off of everything, and tried to compose the side letter to have us recognize his ownership but remove him from any responsibility. So he wanted us to take the brunt of all the responsibility and indemnify him, but still, if we were to move on and actually turn the business around and turn a profit, he wanted to take the profit. And I will say that we did have individuals who were interested in purchasing his interest of the business, but he would not do so until they paid off the $100,000 loan to Aaron Haynes, which never was a business asset. It never touched our bank account. And John Lee is the one who specifically asked for that check, and they just ignored him, and they didn't answer his request. And he asked for a copy of the voided check, where it was deposited, and we still to this day have never seen where that actually went to. It didn't go to our business bank for sure.
And John Lee is the CDTFA employee you were referred to earlier?
Yes.
Did Mr. Frazier instruct you not to pay the taxes?
He wanted me to get a loan to pay them. And so that's why we were sent to Clearinghouse. We were sent to Self-Help Credit Union in Oakland. We were sent several places. He wanted me to get a loan to pay them. We didn't have the capital to pay them and stay open. So his suggestion was to get a loan. And in the emails, you know, I referenced that, you know, he wanted me to get a loan. I couldn't qualify for any loans because we weren't the money equation in the business. He was the capital. He had all of the net worth, and we were just the sweat equity. We're supposed to be the sweat equity. So that was his answer to the tax problem, was to get a loan to pay it.
Is there anything in the evidence, any documents that reflect him telling you not to pay the taxes?
I wouldn't say directly. Most of our meetings happened in person.
I wanted to ask about the it was a document filed with the Secretary of State. Hold on, let me find it. Oh, it was the amended Articles of Organization filed with the Secretary of State in 2015.
Yes.
Mr. Franco, I see you nodding. So I think you know what document I'm talking about.
Yes.
It was filed on May 5th of 2015, where previously the prior statement of information filed with the Secretary of State in 2013 listed both you and Mr. Frazier as managers, and then the amended articles indicate that the LLC will be managed only by one manager, and it has your name.
Yes.
Can you tell me what happened there?
The context behind that was him not wanting to guarantee the loan. So inside the exhibits where the emails are, there's back and forth emails between himself, the loan agent, his name was Mark Lane, his assistant, telling him that they needed him to drop his ownership under a certain percentage so he wouldn't be liable for the loan. And I think I can't remember how I phrased the question, like, is this how it's going to stay, or they need. He said, well, this is how, once the loan funds, then we'll change it back. That's in the emails directly from Terrence. So the switch from me to being the managing member was solely so he wouldn't be on the hook for the loan. And I was coming from a place of trust, so I never questioned him. I grew up watching Terrence play baseball. I knew him for 30 years before we actually got into business together. So my family trusted him.
And can you point me, or I don't know if Mr. Burnett can point me to where in the emails you're referring to? Do I have those documents?
James, I believe that is all in the emails that we provided.
Yeah, I have the email PDF. Let's see. It's about 149 pages, unfortunately.
Yeah, there was a lot of emails, and it was between myself, a gentleman named Chris Foxen was Terrence's assistant. Mark Lane was the loan broker, and there was back and forth about dropping the percentage and why Terrence, and even the bank is the first one that said, in order for us to do this, and not have Terrence as a guarantor, Terrence cannot be a majority owner. And so that's where the conversation started with David Immersion, started with Terrence and his team. I was kind of rolling with the punches. I was, like I said, I was experienced at running restaurants at a restaurant level. This was my first time swimming in these waters. And so this was Terrence's part. And so I was trusting him.
All right. And I see that I do have the emails, the 149 pages of emails that you're referring to.
If you go to, I'm sorry, page
Yeah,
62 of that, page 62.
Okay.
Of the PDF.
Got it. I see that email. For December 1st, 27. Well, it was originally email originally June 25th, 2015, then forwarded on December 1st, 2017. All right. I think
Correct.
those are all my questions for right now. I may have more questions later on, but I'll turn it back to Judge Stanley. Thank you.
Thank you, Your Honor.
Thank you. Judge Lambert, do you have any questions?
This is Judge Lambert. I don't have any questions at this time. Thanks.
This is Judge Stanley again. I did want to follow up a little bit, Mr. Franco, on some of what Judge Brown was asking you about. You said that you implied that maybe Mr. Frazier was putting some limitations on you in face-to-face meetings. Was he actually directing you to make payments other than for taxes?
Yes, make sure the rent got paid, make sure we can still get product in, keep the doors open at all costs, is what he told me. When we talked about, we had a specific conversation with a gentleman named Leo Landaverde, who was Terrence's, one of his financial coaches or someone. I'm not sure what he was. He was there to help Terrence with his other businesses. And in that conversation, was over the phone. We spoke directly about the sales and use taxes that were due. And, Terrence told him the same thing. He told me, we're going to get a loan for that. And when he said, we're going to get a loan for that, he meant me. And there was no way I was getting a loan. We suffered personally. Mr. Brunette made a statement where we could have qualified for state benefits, because we were like, we weren't making anything. And so we went through a lot, and I told Terrence, any other partner probably would have just walked away and just let everything fall apart. I was doing my hardest, one, not to let him down, and two, he would tell me, if this goes south, like, you lose your home. And so we were working as hard as we could to make sure that didn't happen. And we only have so many resources. And like I said, he was the one who was supposed to be the resource for finance. And when he stopped showing up and just started avoiding us, and then his friends were coming by saying, Terrence is saying he was just a lender, he's not an owner. And then that's when I kind of knew things were gonna get a little muddy. But he, it was an incredible learning experience. I'll say that.
Thank you, Mr. Franco. Given that we've asked questions for now, there may be additional questions for you all later, but let's for now move on to the department's presentation. Ms. Daniels, you may proceed when ready.
Thank you. Good afternoon. The issue to be decided today is whether appellant is personally liable for the unpaid sales tax liabilities of Slamwich Company LLC, doing business as Beach Hut Deli. Hereinafter, we will refer to it as the business. And that's for the period of April 1st, 2016 through November 25th, 2017, hereinafter referred to as the liability period, pursuant to Tax Code Section 6829. Upon the termination, dissolution, or abandonment of a business, a manager of an LLC may be held personally liable for any unpaid taxes, interest, or penalties of the business if such person's failure to pay was willful. And that's Tax Code Section 6829, Subdivision A. A willful failure to pay means that the failure was the result of an intentional, conscious, and voluntary course of action. Tax Code Section 6829, Subdivision D. This failure may be willful even if it was not done with a bad purpose or evil motive. And that's Regulation 1702.5, Subdivision B2. A person is regarded as having willfully failed to pay taxes or to cause them to be paid, where he or she knew that the taxes were not being paid and had the authority and financial ability to pay such taxes or to cause them to be paid, but failed to do so. Since appellant does not dispute that the business's closure was effective as of November 25th, 2017, that the business collected sales tax reimbursement from its customers during the liability period, and that appellant was the person responsible for the business's sales and use tax compliance, we will focus our presentation on whether appellant's failure to pay was willful. So first, we look to whether appellant had authority to pay the taxes or to cause them to be paid. First, on the date that the taxes became due, and second, when they had actual knowledge. And that's Regulation 1702.5 B2B. Under this regulation, a responsible person who was required to obtain approval from another person prior to paying the taxes at issue and was unable to act on his or her own in making the decision to pay the taxes does not have the authority to pay the taxes or to cause them to be paid. However, a person who had the authority to direct payment but merely deferred to the decision of another individual had the requisite authority, and that's Regulation 1702.5 B2B. Appellant's authority to make the business's tax payments is exemplified by the fact that he was a signatory on the business's bank account, and you can see Exhibit A at page 31. And he signed check payments issued to the Board of Equalization during the quarter preceding the liability period, which was the first quarter of 2016. And that's Exhibit A at pages 24 through 25. Additional evidence of his authority includes the following. Appellant identified himself as the business's owner or member when he e-filed the business's sales and use tax returns. That's Exhibit A at pages 18 through 23. Appellant is also listed on numerous applications, forms, and Secretary of State filings as the manager of the business. For example, he is listed on the business's amended articles as the manager for the business, Exhibit C15, as a member on the Statement of Information for the liability period, that's Exhibit C17, and as a member on the business's IRS tax returns, Exhibits C16 and C20. Appellant also signed as a member partner on the business's lease, which is Exhibit C21, and on the business's merchant services agreement, that's Exhibit C23, and on its ABC license, Exhibit C25. As such, it is clear that appellant had the authority to pay or to cause payment of the business's tax liabilities, and there's no evidence that his authority was limited in any way. So we will move on to the element of knowledge. For liability under tax code section 6829 to attach, an appellant must have knowledge, meaning the person had actual knowledge that the taxes at issue were due, but not being paid on or after the date that the taxes became due. That's Regulation 1702.5, subdivision B2A. Here, appellant had knowledge that the tax liability was not being paid for each reporting period throughout the liability period. As mentioned earlier, appellant identified himself as an individual responsible for the business's sales and use tax compliance during the time he worked for the business, and that's Exhibit A at page 12. And this is further corroborated by the fact that appellant personally filed the business's sales and use tax returns for each quarter during the liability period and failed to remit payment with those returns. And that's Exhibit D. So despite the fact that he signed the returns declaring that the business owed sales tax for each respective quarter at issue, he did not pay or cause these liabilities to be paid. Moreover, since appellant was a signatory on the bank account and would have issued the check had one been remitted or authorized a bank transfer, it is clear that appellant had knowledge that the taxes were not paid when he filed the returns without payment. For your reference, we have provided the panel with a table showing the due dates, filing dates, and amounts due for each quarter during the liability period. And that's on pages 2 and 3 of our response brief that was submitted on June 13th, 2023. So the foregoing supports that appellant had knowledge of each liability amount on the due date for each quarterly return and knew that the liabilities were not paid when he personally filed each return without payment. The third requirement of willfulness is that when the responsible person had actual knowledge and authority, he had the ability to pay the taxes but chose not to do so. Again, that's Regulation 1702.5 B2C. Throughout the liability period, the business had the ability to pay its sales tax liability, but chose instead to make payments to other creditors. as appellant has admitted today. Appellant admitted that the business charged and collected sales tax reimbursement on its sales as a standard business practice throughout the liability period. And that's Exhibit A, page 12. And accordingly, at the very least, the business had those funds available to pay the tax liabilities as they became due. Moreover, while appellant had knowledge that the taxes were not being paid, the business paid rent, which is shown at Exhibit C22, and made other numerous payments to different vendors, such as instead of paying the second quarter 2016 tax liability in the amount of $8,880, which was due on July 31st, 2016, the business made payments to Valley-Wide Beverage Company in August and September of 2016, exceeding $20,000. And you can see that as at Exhibit C25, pages 15 through 16. This Exhibit C25 details all the payments that the business made to Valley-Wide instead of paying its tax liabilities. For example, after the business filed but did not pay the third quarter 2016 liability of roughly $22,000, which was due October 31st, 2016, it paid Valley-Wide over $23,000 for the months of November and December 2016. And those are pages 17 through 18. The fourth quarter 2016 payment of $18,937 was due on January 31st, 2017. Again, the business failed to pay its tax liability and instead paid over $27,000 to Valley-Wide for the months of February and March 2017. And again, that's pages 18 through 19. The first quarter 2017 tax liability was approximately $17,000, and it was due on May 1st, 2017. And it was remitted again without payment, and that was on July 31st, 2017. During such time, the business made payments to Valley-Wide totaling over $29,000 for the months of May, June, and July 2017. And you can see those at pages 20 through 21. The second quarter 2017 tax liability of roughly $17,000 was due on July 31st, 2017, and was remitted without payment on its due date. Afterwards, the business made payments to Valley-Wide for the months of August and September 2017, totaling over $28,000. And that's pages 21 through 22. The business's third quarter 2017 tax liability, which was approximately $17,000, became due on October 31st, 2017. And instead of the business paying its tax liability, it issued a check in the amount of $22,310 to Asset Recovery Solutions. And that's Exhibit C28 at page 38. During the fourth quarter of 2017, the business continued to collect sales tax reimbursement from its customers and thus had those funds available for remittance to the state. Additionally, the business's banking records indicate that during the fourth quarter of 2017, the business made additional payments to creditors and vendors totaling $3,096. And that's Exhibit C28, pages 31 through 37. This shows that the business had the funds available to pay its sales tax liability throughout each quarter of the liability period. The business did, in fact, collect sales tax reimbursement from its customers, and thus appellant could have used those funds to pay the business's tax liability, but instead chose to pay other vendors in lieu of making such payments. Finally, appellant has alleged that his former business partner, Mr. Frazier, is liable for the business's failure to pay its sales tax liabilities. To the extent that appellant argues that Mr. Frazier alone should be held liable, the department notes that more than one person can be held liable for the business's tax liability. And that's under Civil Code Section 1431, which says, quote, an obligation imposed on several persons or a right created in favor of several persons is presumed to be joint and not several. You can also see Regulation 1702.5 and California Corporation Code Section 17703.04. As such, any liability borne by Mr. Frazier does not bar appellant from also being held personally liability for the business's tax liabilities. Because the department has shown that appellant willfully failed to pay the business's taxes for the liability period, appellant is personally liable pursuant to tax code section 6829, and appellant's appeal should be denied. Thank you.
Thank you, Ms. Daniels. Judge Brown, do you have any questions for Ms. Daniels?
I will say I don't have any questions right now. Thank you.
Okay, Judge Lambert, do you have any questions?
This is Judge Lambert. I don't have any questions. Thanks.
Okay, this is Judge Stanley speaking. I just wanted to clarify after that, Mr. Brunette, after CDTFA's presentation, that you have acknowledged the part of what Ms. Daniels was arguing, that Mr. Frazier and Mr. Franco could potentially both be liable for the same debt. And I believe you acknowledge that, right, Mr. Brunette?
I understand that. I understand her point. Yes.
Okay, and so I'm going to give you an additional 5 minutes to respond to all that's been presented here. But I just do want to clarify, it sounds like what you're saying is that Mr. Franco had paper authority, but that he was in actuality restricted by the majority owner. So you can respond to that in your final comments.
Okay. You'd like me to do that now?
Yes, please.
Okay. Well, although we understand the point from CDTFA that multiple individuals can be found responsible for the non-payment of taxes, I think the evidence here points that Mr. Franco was restricted in his ability to manage the finances of the business. From the beginning, and specifically from the strings that were pulled to rid himself of the of ownership, just to put himself back on. He had a higher level knowledge of the inner workings of these businesses that Mr. Franco just did not have. It's our intent. Well, it's our belief that to use a phrase, he used Mr. Franco as a pawn in the situation. Had his Mr. Frazier's house was not lost in this business venture. Mr. Franco's was. There were loans that were taken out, merchant loans, in order to keep the business operating, which had incredibly high daily limits, or excuse me, daily repayments that no business really has any business taking. But I understand that some are forced into that corner. So again, although to conclude here, although we understand that multiple individuals can be considered responsible, we don't believe that that the willfulness test is met for Mr. Franco based on the evidence provided.
This is Judge Stanley speaking. I'll circle back to my co-panelists. Judge Brown, do you have any final questions?
Yes, let me ask CDTFA. What is CDTFA's position regarding whether, let's say, a situation where there is hypothetically a someone behind the scenes who instructs others to put their names on the tax documents and has authority under this kind of circumstance? Could that be a situation where that would establish that the person was not willful? And then the second part of my question, of course, is, do we have the evidence for that situation here?
So If I'm in a situation where one person could not make a financial decision because maybe they don't own a percentage high enough, they didn't actually have they wouldn't have the authority, right? But that's not what we have here. We don't have any evidence showing that Mr. Franco couldn't make decisions. In fact, we have ample evidence to the opposite. We have ample evidence of his making payments to all of these different vendors. So, I mean, if we had some sort of operating agreement showing that he didn't have, we would need evidence. We just don't have any evidence here.
So,
That's
and this is Chad Backus with the department, just to kind of follow up on Miss Daniels' response. We understand that there are situations, business agreements that happen where there is somebody behind the scenes who is directing payments. And those situations could arise to where if there was sufficient documentary evidence that the department could see that the individual was being used as a pawn or used as someone who had paper authority, I think as the phrase was used today. Unfortunately, in this situation, the department doesn't feel like that documentary evidence exists. We understand, we have read the emails and looked at all the evidence that we have. But the department doesn't see where Mr. Frazier was limiting Mr. Franco's authority to pay the tax liabilities in any way. We understand that Mr. Franco felt, he has testified that he felt that he was directed to pay back the loan or to pay the rent to keep the business open. And that's a common thing that we see in these types of cases. So I guess the bottom line for the department is that there wasn't any documentary evidence to suggest that Mr. Franco couldn't have ignored those directions and instead paid the tax liabilities when they became due.
That's all I have for questions right now. Thank you.
Okay, Judge Lambert, do you have any final questions?
This is Judge Lambert. I have no questions. Thanks.
And I would just like to give Mr. Burnett or Mr. Franco an opportunity to respond to what the department just answered.
I would love to, Your Honor. Respectfully, I would like to say that every piece of documentation that I signed as an owner, Mr. Frazier also signed as an owner. He had the benefit of claiming the loss the first year when we filed our taxes as an owner, as 51% owner. He had, the authority to sign at the bank. He was aware, and it is in the exhibits marked emails where we cover the taxes. He was aware, so Mr. Frazier himself could have gone to the bank and paid the taxes as well. His directions to me were to keep the doors open at all costs. Mr. Frazier is always is also a partner with the landlord of that location. So he wanted to make sure that the rent got paid. So he was in good standing with Lance Cashin Corporation. So these were the directives that were given to me. And Mr. Frazier had, 25 years on me as far as operating and opening businesses. This was my first one. So when we were abandoned and we were left to be the funders of the business, in which he is on record in the exhibits as well of saying he would put up all the money, it was a whirlwind every day. And it was unlike anything. We were under complete duress. Most of the time we had the business open. He had the action, he had the ability to take over the company in totally clean house and bring in a whole new staff, but he's saying he didn't have the ability to pay the taxes. I was following 100% clear direction from him, and I was reminded several times that my house was on the line. So I understand the vendors that were paid, and a lot of those vendors, the dollar amounts were so high because we were behind, and so we had to to keep the doors open. And as far as that goes, I was instructed to get a loan, right, from somebody, and we talked to self-help, like I mentioned, self-help credit union. We talked to some of the local people here. So I just wanted to make that statement that all of the documents that were said that I signed as an owner, Terrence Frazier also signed as an owner. And the emails will also show the reason why I was switched to the sole operator was so he could avoid being guarantor on the loan. Thank you, Your Honor. I appreciate the time.
If I may follow up on that, I want to go back and point to the Exhibit C number 9, titled Form 1508, Terrence Frazier, just to support some of the information that Mr. Franco just claimed here. Terrence Frazier, on his responsibility questionnaire, I believe it's called the CDTFA Business Operations Questionnaire, when asked what his responsibility was at the business, he stated, quote, "I loaned Sammy and Rachel money," end quote. And that was the extent of what he claimed to be his responsibility at the business. And I think that goes to show, the type of misrepresentation and, really internal business knowledge that, we could call it knowledge, but internal business knowledge that Mr. Frazier had to limit his personal exposure and to be not truthful when it comes to these types of businesses that he operates. Mr. Frazier, clearly has ties to the community, ties to multiple other projects, investors, and unfortunately, he hasn't lost anything related to this, the downfall of this business, where Mr. Franco put everything he had into it and lost everything. So I think it should be noted in the context of where these individuals stand now. Who really lost out on the situation, and the fact that to this day, we don't believe the CDTFA has found Mr. Frazier to be a responsible party. At least from the documentation provided, it states that he is not a responsible party when the evidence points otherwise. So thank you.
Sorry. Yeah, this is Judge Stanley speaking. I wanted to thank you all for coming and presenting to us today in detail. And this case is now submitted for an opinion and the record is closed. The judges will meet and deliberate to decide this appeal, and will issue a written opinion within 100 days. So today's hearing in the appeal of Franco is now closed, and